Question 2, discuss the effects of the audit findings on the financial statements. So I've got a nice structure that I know I must follow. Let's go and have a look at each of them to prove misstatement if there is, and then work through our analysis of the misstatements. So we're at working paper A4. We've made a note there of materiality of 220,000. Our first finding was the vouchers. I've already made a note here. There's a misstatement. Revenue recorded instead of income received in advance. I've already made a note here that it exceeds final materiality. So if I've analyzed sufficiently in my reading time, I don't even have to read through it again. I can go and start earning marks immediately. Question 2, and I'll start with the vouchers, and I'll say, vouchers redeemable in the next financial period have been recorded as revenue in the current period. Therefore, there's a misstatement in that revenue is overstated and income received in advance understated. So I've proved there is a misstatement. Next, it is quantitatively materially misstated because 255 exceeds 220 final materiality. It is qualitatively material or materially misstated because this is non-compliance with IFRS 15, your revenue standard. This is recording revenue before the conditions are met for revenue to be recorded. It is factual. There is no doubt. It's not pervasive because it is limited to revenue and income received in advance. And so therefore, I will request that they go and debit revenue, credit income received in advance. And it's as simple as that. If I look at this, I've got 1, 2, 3, 4, 5, 6 marks. Let's look at the second finding. Consumables, I've got here, there is a misstatement, but I've made a note here, it's in a sample, so therefore I have to extrapolate to get the potential misstatements in the entire population. Okay, so consumables. So I'm going to say there's a misstatement of 50,000 in the sample of 750 consumable transactions due to fraudulent activities. So I'm proving that the fraudulent activities show me that it's a misstatement. But that is in the sample, so potentially there's more. I therefore need to extrapolate the misstatement over the population to determine a misstatement value for the entire class of transaction. And so therefore I've got to do my calculation. So I've got to say 50,000 over 750 times by 3420, which is the population, which equals 228. So that is the projected misstatement for the population. So I'm going to say the projected misstatement for the population is 228, and that is quantitatively material because it exceeds final materiality. Irrespective of whether it's the projected or the actual, this is qualitatively material because it is fraud. And the users will want to know about the fraud. Okay. So, now what I'm going to say. So I've come up with a projected amount, but that's not necessarily what the client is going to go and do, is go and adjust the financials because we've projected. So my request is going to be, I'm going to request management to determine the value of the misstatements in consumables, or for them to go through the consumables to make sure that there isn't any misstatements. In addition, I'm going to request them to adjust by the projected misstatement of the 228. I can't show the adjustment because I don't know how it's been fraudulently recorded. What's the opposite entry to it? So I can request the adjustment, but then I can also say that if they won't adjust, then I can increase my sample size and testing of consumables. Okay, and is it pervasive? I could say either it's not pervasive because it's limited to consumables, or you could say it is pervasive because it is fraud if management don't adjust, because it would indicate that they are then involved in the fraud too. Okay, so if they don't adjust or make changes because of the fraud, take action as a result of the fraud, then we consider them being a part of this fraud, and therefore it would be pervasive because they could be acting fraudulently in any other balances or transactions. What would make them limited to consumables only? Okay, last one. The allowance for credit losses. So I have made a note here to say that previous is not reasonable because there was a change from the prior in the form of COVID. I've said a better method is here, and I've put down a calculation. I haven't done the calculation because I didn't know if this was going to be relevant. So now I need to do this calculation. 3 million times 15% is 450. And so now if I compare their estimate of 202 to 450, the difference is 248, which is a misstatement and material. So allowance for credit losses. I'm going to say there's a misstatement because prior methods and assumptions have been used which do not take into account current circumstances, which is the COVID-19. What is my misstatement? The misstatement is $3 million times 15%, 450, less what they've recorded as 202, which equals 248. It is material quantitatively because it exceeds final materiality of 220. Just. Is it qualitatively? And here, I think you could go with either. Here you could say yes, because it affects key ratios like liquidity and solvency, because it's going to affect your assets. I prefer to go the conservative approach and say that it is qualitatively because of the key ratios, or if you want to say because the methodology doesn't seem to be reasonable. It is judgmental, and therefore they might not adjust because it's based on their judgment versus ours. So the adjustment that I'm going to request is going to be to debit the allowance for credit losses of 248, credit trade receivables of 248, or debit credit losses, credit allowance for credit losses. Okay, I've just actually hit the trade receivable element automatically. Okay, you can quickly go into the lecture notes to see where this structure is followed so that you learn it and apply it. So week 15, your evaluation of misstatements. We went to common type questions or misstatement evaluation process. First, you're going to have to prove it's a misstatement, evaluate quantitatively or qualitatively, categorize the misstatement, request adjustment if necessary. Okay, I've included the pervasiveness because we were just doing it on an individual basis, so just one step further in the analysis of that misstatement. Okay, if you went down into your common questions where we said discuss audit findings, the first thing was to evaluate the misstatements. Okay. Question 3.